this is Pat Walker at Mission Winners. I'm doing a video here on being prepared. I was a Boy Scout leader for years and actually had about 5 kids make Eagle when I was the Scoutmaster. I enjoyed just trying to help these guys become better men and just challenge them in various ways. I actually took them on a high adventure, got some of them up over 14,000 feet in the mountains in Colorado. And again, the idea of helping people, challenging them, but doing it in a constructive manner that helps them grow. That's part of the reason why I love Mission Winners, is the idea, and what I try to do, is simply inform, educate, motivate, reinforce tools and tactics to consistently find stocks that can make you good money. That's what we're after. No day trading, no 5-minute charts, no in and out stuff. A good trend pays more than all the in and out stuff. I've seen it over 30 years. I've seen it. Ride trends. Ride trends for as long as possible. Use the 50-day, which is the green line. Use the 20-day simple, which is the blue. Use the 5-period exponential. The 8-period exponential, which is the yellow. Make it easy on yourself. There's a lot of work on that 8-period exponential. There's a couple of years of research in that yellow line, just for what it's worth. That's part of my background. So it's what we do. And you can say, well, Pat, all right, that's really nice. What do we look for? I mean, really, what are we looking for? We're going to look for $5 stocks, $3 stocks, day trade. What are we going to do? No, to tell you the truth, one of the things that we do is we develop our edge. And what is our edge? We know for a fact, not opinion, fact, what are the traits of stocks that can make really good moves. I don't day trade. I'm not going to buy something and have it go up a point or 50 frickin' cents and sell it. It's too much work. Now, if you do it and you're successful, that's fine. That's fine. But again, I have found that riding a good trend pays more than all the wiggles. Just works. So I want to share something with you. This is an article from Investors Daily back in March 14th of 2008. But the data is still relevant. Certain things just don't change. A curveball moves a certain way, a slider moves a certain way, a fastball moves a certain way. That doesn't change. So what are we doing here? Let's get down to it. I'm going to read this to you. It's very short. Most important, you don't need hundreds of stocks. You just need 6 or 7 great stocks to fill your portfolio. There's wisdom there, profound wisdom. In a study of the 600 most successful stocks from 1952 to 2001, folks, that's almost 50 years. 50 years. That is a statistically valid sample size considering how long the market's been in existence. All right, the fluid market, by the way, in New York, all right? In a study of the 600 most successful stocks from 1952 to 2001, here we go. 3 out of 4 had earnings increases averaging more than 70% in the latest quarter before their major advances, before they broke out. 3 out of 4 had earnings up 70% or higher. Folks, that is an edge that we can use. You say, I might miss something. Stack the deck in your favor. Why not? That's super stocks, all right? And I stress again, 3 out of 4 had earnings up 70%, more than 70% in the latest quarter before their move. The 1/4 that did not showed an average EPS gain of 90% the very next quarter. 90%. Great earnings. Great earnings. Reinforce it, and you will increase your odds of making money. Now I'm going to show you something. These are some of my screens on MarketSmith. I was in the beta test group for this original product way back when it was called Daily Graphs Online. I love this product. Earnings per share ranked 90, relative strength ranked 90, composite rating 90, A-rated groups, 40% earnings and 40% sales, composite rating 90. The bill screen, love the bill screen, great estimates. The master screen, stocks in the top 10 groups, 40% earnings, top 40, 45% average sales for 2 quarters, top 40 groups, 50% earnings in the top 60 groups. Right there. You can say I might miss something. That's okay. You have stacked the deck in your favor. You know what statistically works more times than it doesn't. And by so doing, you've developed an edge. But you've also developed confidence on what to look for. And then you know what you do? You turn off the noise. Strive for simplicity. Look for clean and simple chart patterns. Look for simple entries in the charts. I'll give you an example. Right here. This stock, GSX. We bought right there. I'll shrink this for you so you can see this. Right there. Volume, heavy volume. This stock, when this broke out, right here, had revenues up 441%. They were up 441% before we bought. I come back to the research study. All these stocks had either great earnings and or great sales, great revenue. It's what we look for. It's our edge. By so doing, we can invest in confidence, and we look for that volume surge to know that other people see what we see, and we capitalize on it. And then we let it trend. Do they all do this? No. Which is also something else we teach. Good money management principles. Ride the trend, sell some into strength, never let a good profit turn into a loss. If it starts to lose the 8-day, you can take some off. Starts to lose the 20-day, you can take some off. You've got great gains, you get the other shares down to the 50-day and let it work. I've had stocks, I don't even have them on my front page. I don't even look at them. Just let them work for you. So now you have an edge. You have an edge on the characteristics, knowing the characteristics of super stocks, knowing when to get in, what to look for, and let them work. By so doing, you will be better than most investors out there. And you don't need to manage, you're not managing a mutual fund. Also, you can say, what are the number of stocks? A couple of constraints for you. Don't buy low-price stocks. Don't buy thin stocks. Don't buy stocks that are under, $10 or $12 a share. Buy stocks within 20% of 52-week highs. Buy stocks over a rising 50-day. Buy stocks that trade 200, 300,000 shares a day. Buy stocks in the leading groups. By using these constraints, you have developed a model because you know the traits of past stocks and you're able to capitalize on it. And the beautiful thing is this. If it doesn't work, you sell it and limit your losses for a very small loss. You don't even need to give it 5 to 7%. The best stocks from a clean and simple base pattern that has great fundamentals, they just push away. They just push away and you can let them go. Right here. Paylocity, right here. Nice shelf. Look at the volume surge right there. I'll enlarge this for you a little bit. Right there. Look at the volume. The day before, this stock did 211,000 shares, 543,000. It just walks up. Did we sell some into strength? Yes. Here was one trigger bar right here. Look at the volume on that bar. That's not mom and dad selling. That's serious. So you sell some. Do you sell it all? No, because you don't want to limit your profits. but you have rules and tactics to get in and get out. And again, the primary foundation of this video is this. Focus on stocks in leading groups that have either great earnings and or great sales, and you would prefer also to have really good earnings estimates going forward, and that earnings estimates are being revised upwards. That is the edge that you develop. That's what we teach, and that's how we find our stocks. And I thank you. I appreciate your time, and I hope this helps you.